The largest liquidation event in crypto history just hit. Bitcoin crashed, the altcoins crashed, all the leverage got wiped out. It is absolutely insane. So this video, I want to just go through the charts, go through the data, then put it all together and put together my thoughts on what could happen next, because this is what I've been looking for the last several weeks. You can go through my content for the last couple of weeks. You can see I've been vocally pretty bearish, saying that the charts look like the top is in. We're at the maximum cycle length. We have weekly RSI divergences on Bitcoin, on Ethereum, on total market cap. Everything is pointing towards lower. And what they've done is they've kept it going higher and higher and higher and higher and higher. And then just like that, they pull the rug and everyone gets wrecked unless you were prepared for it. So we're going to run through all of this. Grab yourself your favorite beverage and we will dive in. By the way, excuse my voice. I'm a little bit under the weather after some travels. So it's just going to be what it is. There's nothing I can do about it. So we're just going to have to go through the charts here. I want to start out here with the fact, okay, it was the single largest liquidation event in history for crypto, which means basically everyone on leverage got wiped out. And this is the number one rule you should always be aware of. When you're trading with leverage, even a 2x leverage is not safe, because a 50% drop in crypto can happen. And on 2x, a 50% leverage, 50% drop will wipe you out, as many people experienced. So you got to make sure that even in the worst case, when you're trading with leverage, if a black swan like this hits, that you don't get wiped out with your whole trading account. You should never have that all at risk. That is the issue. If you have spots, well, you can't get liquidated, so that's the nice thing, but obviously you can have a massive drawdown. And as the price goes higher towards bull markets, you see all the talking heads. I've been very vocal against this. The people on TV coming out saying, oh, Bitcoin's going to 250,000 by the end of the year, this, that, at the end of the maximum historic cycle. They always do this because they want retail, they want people to buy as they're selling. This is the distribution from the smart money into the dumb money, into retail, into institutions this time also. Smart money distributes, and when the buying stops, so they keep pushing it higher, when it stops, the whole market just dumps. And in this case, obviously, personally, I think this was just a massively coordinated, planned event. They just decided to rug the entire market. There were people that knew about this ahead of time. And obviously, yes, it comes out with the announcement that Trump announced tariffs on China, but this was evident in the charts a long time. Anyone who trades, any technical trader will tell you the charts show what is going to happen before it happens, before the news comes out. That's why I've been bearish for the last several weeks, because the charts have just been telling the story. It is not sustainable anymore. There's distribution happening, and then all of a sudden the news drops. Trump comes out, he's going to say, oh, we're putting tariffs on China, and everyone's like, oh, the reason the market dropped is because of Trump. No, it's not. It was in the price action all along. The divergences are there. The distribution has been happening for weeks, where wallets like whales, balances from years that they've held on to are starting to wake up. They're being sold. Whales are selling and selling and selling for the last couple of weeks. This is very simply Wyckoff distribution. It goes through four phases. There's the accumulation phase after the bear market, the markup phase, which is the bull market, the distribution phase, which is the end of the bull market when the smart money offloads, which we're seeing right now, and then we get the markdown phase, which is the bear market, which is coming. So this is all pretty textbook stuff. But it's always a little bit difficult how to get that exact timing right and the exact when the top is. So with that bit of kind of intro out the way, let's look into some charts, let's look at some other stuff, and then let's talk about what is likely to happen next. About this being predictable, yes it was, the chart showed it. And this is the exact setup you can see over here. It is a 1 to 8 risk reward. I called this in real time, ahead of time. I said that this was a range setup. This is my favorite trading setup. You can see what happened here. Okay, so we had the high, we had the low, and then we had this move, which I also called up into the Fibonacci golden pocket, right? In September, and it dropped back down. Now, what they did here was very, very sneaky. They did not take the liquidity because the end goal is for this to continue going down normally. So I think They knew what was coming. They knew this announcement about the tariffs was coming. So they put in one massive scam squeeze. Instead of dropping in and taking the liquidity here, which was the more probable scenario at the time, they pushed it one more time. Massive, massive squeeze. Okay? This is not normal. This is just a massive squeeze with perpetuals. They were pushing it, pushing it, pushing it. And they took this high. You can see they took the liquidity and then it deviated here. So this was very calculated, an exact move above the previous high, a drop back below this deviation. And then the target was, and you see they left it unswept on purpose last time, in one massive move, one massive dump. You can see how this all comes together timing-wise. This move push up was calculated perfectly for the dump to happen perfectly with this tariff stuff. And if you think that's crazy, this market, it's all very calculated. It's all works precise on levels, on dates, and you can see there's even like insiders, right? You can see there's this whale on Hyperliquid that went massively, massively short right before this happened. Now, the Hyperliquid is a DEX, so anyone can trade there semi-anonymously, right? You know the address that's doing it, but you don't know who's behind the address. And obviously, if someone were to know about this announcement coming, they could do exactly that. If I knew that Donald Trump was going to announce that, and let's say I had a whole bunch of money, I could just move it to Hyperliquid. I knew the announcement was coming on Friday, maximum short it, and make $200 million in a single day. That's exactly what happened. Who's behind that? I don't know, but probably, most likely, someone who knew what was coming. And then obviously, there's tons and tons of people who got absolutely wrecked on this. Like I said, even a 2x leverage would have gotten you wrecked. So you can see there's on Hyperliquid, thousands, tens of thousands of people got wrecked trading across all these markets. It's a pretty brutal bloodbath. But if you knew this was coming, this was a classic range setup and you could have shorted. And I shared this setup in real time in my VIP, even on my socials. And if you were paying attention and you knew the charts, you could have shorted and you could have made a heck of a lot of money on this. Even if you didn't know that that news was coming, it was just purely the setup. And by the way, if you want to learn how this works, price action, trading, shorting, I have a completely free course. It's called Leverage Hero. I break this all down for you, including the setup. The link is in the description down below. For now, I'm keeping it 100% free. We have more than 1,300 members in there already. So go and sign up, grab access, because at some point in the future, I will start charging for it. I put a lot of time into this. I break down exactly how market structure works, price action, these setups, and how you can make boatloads of money trading them for free. So link in the description down below. So there's two things I want to share real quick before we continue looking at the charts. This one is pretty crazy. It should pretty much blow your mind. So yesterday when this happened, right, this was the 10th of October, 2025. Now you go back and you look at what happened in the 2007 crash. That started literally on October the 9th. So the exact global financial crisis of 2007, 2008 started on the exact same day that yesterday Trump announced tariffs and the stock market sold off massively, crypto dumped massively. So is this, are we about to start another global financial crisis? That's what I'm hinting at. And the timing of this is absolutely insane. I don't know if we live in a simulation or if this was purposely done. What is going on? Look at this. The 2007, 2008 stock market crash. There was a clear start point, October 9th, 2007, the all-time high before the crash. This is literally what happened. Okay, so we have that. And then if you compare the factors, what happened in 2007, and you compare where we're at right now, so many things are pointing towards another global financial crisis. Number one, we had rate cuts in 2001 and 2007 before the global financial crisis happened. We had the first rate cut again last month. We're going to get another one this month in October. Then we had the housing unaffordability issue. The same thing is happening right now. We're at the most unaffordable housing in the US like ever. So it's even worse than in 2008. Credit card loans, auto loan delinquencies are at all-time highs. The Warren Buffett indicator is at the highest level ever, which means that so many of these valuations, basically everything is pointing towards everything is extremely unsustainable. And we're lining that up with the exact start date of the 2007 crisis. We're lining it up with the exact maximum cycle length of cryptocurrencies, of Bitcoin, and it makes you wonder, is this it? Is this the global top? Are we about to get a massive global financial crisis, a complete bust, bear market in 2026 that's going to destroy absolutely everything? And I must say, personally, I think there is a possibility. The only way is, like, are they going to try something to solve it? Are they going to massively start printing money? That's the only way they can maybe keep things afloat. If they massively start doing stimulus, give stimulus to all Americans, start up the money printer, start up QE, and push it even higher. But even that is a temporary solution, because it's all going to get much worse. Kick the can down the road, even if they do that. And then you have all the other warning signs, like gold and silver being at absolute all-time highs at the same time as the stock market, as Bitcoin. This is a sign that people are running to safety because they know the financial system is probably going to implode. So I do think there is a decent chance that we get a massive global bust across everything in 2026, but maybe even it just started. Maybe it started now. And what that means, that shouldn't be scary. But if you are prepared for that and you get out of all your positions that you should be massively in profit for because everything has gone up only for months or for years, and then you know how to trade and you know how to short it, you can make an absolute fortune in the downturn if you are prepared. If you're unprepared and that happens, most people are going to get absolutely destroyed and wiped out. Everyone on leverage, companies, funds, everything is going to get wrecked. But there will be those who are prepared who will make an absolute fortune. And then, because they made a fortune on the way down, they have even more capital to buy everything up for pennies on the dollar at the bottom. It's always the same thing. These crashes, we haven't had one. We haven't had a crisis since 2008, guys. We are well overdue for it. So, bit of a long-winded explanation here, but I do think that this is something worth paying attention to and considering. And we're going to see how the weekly close is going to end and what's going to happen next week, because it could get a lot more ugly. So let me show you the weekly chart and what's happening here. And we obviously have about 48 hours left for the weekly close. But if we close here at 112,000 or lower, I'm going to call it. I think it's the top. I've been saying this for a while, and it just looks so much like it. We obviously only get the bear confirmation upon losing the 50-week moving average, which is currently 101. So if we get a weekly close below that, it's basically complete confirmation of a bear market and another 50% lower from that level. And you can see here what's been happening, guys. You can see the bearish RSI divergence. It's been building, and it's taking a long time to work out, but that is how it goes. And you can see, just like this massive crash, it goes, take the stairs up, right? That's what they say. It takes the stairs up and then the elevator straight down once it hits. And once it hits, you don't have time to react. It's too late. You can see here, it instantly drops 10, 20, 30, 40, 50%. And by that time, it's too late to act. And then it continues going lower and lower and lower. That's the bear market. That is why you have to be smart ahead of time. You have to sell when you're up. You have to sell on the way up, because once you make the decision for yourself that the bull is over, we're like 30, 40, 50% lower, right, in your portfolio, especially if you're on altcoins. So you can see, even the bear confirmation, losing the 50-week moving average, that's still another 10% lower from here. So, and about 20, 25% from the all-time high. So if you're using that, yes, it can still save you a bunch of money if we're in a bear market and it's going lower, but you're already down like 25% from your portfolio highs, right, by the time you pull that trigger. So you have to be prepared for this kind of stuff. And you can see this was the bearish RSI divergence. Here we have 3 thrusts, and even this, all of this is bearish RSI divergences on Bitcoin, on Ethereum, on the total market cap. And just technically looking at this is not something that is bullish. It is not sustainable, and it usually results in at least a strong pullback, if not a complete trend reversal. That is just how this stuff works. I'm not here to be a bear or a bull. I'm here to look at the chart, to interpret the direction and the price action as best as possible and make money off that. At the beginning of 2023, I was bullish, and I've stayed bullish for most of the year and a half. And then when we started getting to these levels around over here, that's pretty much the end of the cycle. That's just how this stuff works. There's bearish RSI divergences, this maximum cycle length, and we've just basically run the course. And this cycle was pretty bad in terms of altcoin season and making a lot of people money. No, that didn't really happen. We've had crazy pumps on some coins, but we've had a massive dilution of altcoins. We've had 100 million coins created. It's absurd, right? So we're not going to have that same pump across all altcoins and make everybody rich. I don't think that's what's happening. I will switch over to altcoins in a second, but I think for Bitcoin, I think this is it. And let's see how this week closes. I'll do an update on Monday after the weekly close. But 112 or lower, and I think it's game over. I think it's done for Bitcoin, and we get the final confirmation below 101,000. We get a weekly close below that, and then we're targeting obviously 50 to 60% lower based on what happened previously. And that means the target could be somewhere between 40 and 50,000 for the bear market in 2026. Keep in mind, so many people are incredibly overexposed to this. Think of all these treasury companies that started buying Bitcoin above 100,000, right? Even at 110,000, 105,000. Some of them are probably way over leveraged. And the question is, are they prepared for a bear market? Are they prepared for a drop to 90,000, 80,000, 70,000? Are they going to start getting scared and panic selling? And when they do, does that accelerate the selling, creating even more panic, creating the bear market? It's always the same thing. This time is different, but it's not different. It was ICOs last time, it was NFTs last time, this time it's treasury companies. Last cycle was FTX and 3 Hours Capital and Luna that blew up. This time it might be whoever treasury company or fund that blows up. It's always the same. People get greedy, they over leverage in the bull. Then the bear comes, it unwinds, and they blow up, and it causes accelerated selling, and it does the same to the downside. Eventually, it all bottoms out, and then it reverses again. So, the reason why I'm explaining all of this is because this is how you make money with these trends. It doesn't matter, bear or bull. It's just about identifying the trend and being in the right place at the right time, thinking along with the trend. For the last 2 years, the trend has been bull, and it's been good to be bullish. Now we're starting to fizzle out, and I don't think it's a good idea to continue being bullish. I think, in fact, it's probably good to start looking for short entries and playing that. And once we get the official confirmation in below the 50-week moving average, then you're basically, the strategy is selling every bear market rip. Okay, a bear market goes down, you get these pullbacks or these squeezes or these quick pumps, and then it continues even lower. So in the bull market, you want to buy dips because it continues higher. In the bear market, you want to sell the pumps on leverage. You want to short it so it continues lower and you profit that way. You can profit both ways, and you just have to interpret the price action correctly. That is all that this is about, and you can make boatloads of money. And it doesn't matter. Just don't get attached to your tokens. It doesn't matter what you care about Ethereum or Solana or any of that stuff. No, it's just the price action. You long it, you short it, you make money either way. You just have to interpret it correctly. Okay, so quick look at Ethereum and how I see it now. I think it might be a little bit too soon to do this on a Saturday to record this, because we can still get a different weekly close. Like, a lot can happen in 48 hours. They can push it back up. They can sell it even more. But assuming that this closes below this red line, let's say, assuming it closes below the $4,000 level, this might have been a deviation, as you can see here, and this might be done. It could be done for Ethereum. It's pretty wild, but I think that might be it, because all we got is this little wick. We did make a barely new all-time high here, and then we're dropping back down. And technically, just looking at the charts, we deviated above. If we're below this 4,000 level, in the same way like Bitcoin left us behind, right? Remember I showed you that at the beginning of the video? Bitcoin left us up, scam pump, and then straight back down. Okay, obviously it can't go negative, but the lows over here could be the target, and we could be seeing $800 Ethereum in the bear market. So that's pretty wild to say. Obviously there's if-then scenarios, right? There's invalidation levels. So I would say below 4,000 close this week, and it's bearish, and we could be targeting a bunch lower. And then what's super interesting, if you look at altcoins, so let me take Dogecoin as an example. We finally got a massive wick, a massive flush to the downside. And technically this makes a lot of sense. So we basically had like a bear flag here, right? So down, bear flag, and then drop. And that's just, technically that makes perfect sense. That's what we want. We took out these lows and we went basically to here. We had a wick. So before this wick happened, it was less likely that we continue up like this. Just because of the structure here, it just looks weird. So it was a bear flag, but now we've taken that, and the question is going to be here. was this a complete liquidation event that took us back to this level before continuing one final exit pump and then back down? Or is this it, and does it just continue to bleed all the way down? And those are the two options. And I know to someone who doesn't understand the market and who doesn't understand price action, that might be seeming like, oh, it can go up or down. It's always an if-then scenario. So you don't know for sure what you're going to get. Like you can, the easiest way is just to compare it to fighting, right? If you look at an MMA fight, you probably watch UFC or you've watched something before, right? Like where they're fighting, you have two fighters against each other, and when they're standing in a certain stance, you don't know for sure what the person is going to do, right? He can throw a jab, he can throw a hook, he can throw a punch, he can throw a front kick, a side kick. You don't know what's going to happen, right? So there's always multiple scenarios, and for whatever scenario then becomes more likely, you have a certain answer. So if you can see he's starting to lift his leg up and you can see a kick is coming, well then you know, okay, a kick is coming, I might have to avoid it, or I might have to check it or something like that, and then I can counter it in a certain way. It's the same thing with the market. We don't know for sure what's going to happen, but we know it can do a variety of different things. And as the price develops, you can start to see which scenario is becoming more likely, and then you have an answer for that scenario. So if this is starting to look like it was a sweep and we start to trend back up, and maybe, for example, we break back above this level, so about 26 cents on Doge, then once we flip that, we have a scenario where we could potentially long it. At this point in time, we don't really want to do anything because it's a weekend, the news just hit, we don't know what's going to happen on Monday. This could completely dump again on Monday, it could also kind of move up. Everyone is wiped out, so this is not a point where you make a decision here in the middle. You have the two scenarios. So for me, that would be if we can get back above, say, 26 cents, then it's starting to look possible that we might have a continued pump and we might go to this previous high of 50 cents or even higher than that. Until then, though, we're in the middle here. We could also retest the wick lows and we could go even lower than that. And it is also completely possible that we might not get a crazy altcoin season pump, and that this was the end for it, right? That we're going into a bear market now, the stock market's crash, and we're just gonna see like another 2 years of down before up. That's also a possibility. So we have those two scenarios, and whatever trigger kind of appears or presents itself as the price action unfolds, then it allows us to make a better decision. At this point in time, I wouldn't do anything. I'm not shorting it here. I'm not longing it here. We just simply have to wait for the market to show its hand and tell us what it's more likely to want to do. And for that, we will see more next week. Obviously on Monday, we have the weekly close, so I will do an update then. Stay tuned for that. And next week, I will continue to do updates and share more there. So either way, I hope you found this informative. If you did, smash the like button, share it with a friend, subscribe, follow. Make sure to grab my free Leverage Hero course. It is really good. It will explain this price action. Everything that I share in these videos, I break it down so you can understand it. The market structure, the liquidity, the range setups, all of that, it's in there for free. Link in the description down below.